Stock Play of the Day is an educational program. Any statements made by Ally Invest employees are not intended to be or should be considered investment advice, a recommendation to buy, sell, or hold a security, or a recommendation to adopt an investment strategy.
Hello and welcome to the Stock Play of the Day. Today's stock is Walmart. We'll discuss should we pass or should we play? Hello, my name is Brian Overby. I'm the Senior Options Analyst at Ally Invest.
And I'm Callie Cox, Senior Investment Strategist at Ally Invest.
Well, Callie, if I look at the chart of the S&P 500 index, which I have up here, we see that the 50-day moving average is providing a little bit of support to the market. Once again, we saw it happen back in February. And just recently now, as we kick off the new month, we see a little bit of a rally. Today, we're down a little. What do you see happening in the indexes this week?
Yeah, Brian. Well, you're right. The 50-day has been a strong floor for stocks lately. And yeah, as you've noticed, stocks are a little down today, Brian. Nothing major. And the 50-day is what we're watching right now. The 50-day at 38.16 could be a strong floor, as it has been for most of this year. A breather today makes sense, and a breather for the rest of the week could make sense too. In case you missed it, the S&P rocketed higher yesterday, gaining about 2.4% on seemingly no big news at all. We had some positive stimulus headlines, and we had some positive vaccine headlines with the J&J Johnson & Johnson vaccine being rolled out. But other than that, nothing crazy big, no crazy positive, obvious market catalysts. So a little more on yesterday. It was the first time the S&P had gained more than 2% to close within 1% of a record high since the end of 2014. I know that stat is a little loaded, but it just shows how unusual it is to see such a big move this close to a record. And then you add in the fact that there were no obvious market catalysts, and it's just a very unusual news. Pretty crazy if you think about it. I think that shows the insane buying pressure these days that we're seeing on any kind of dip in stocks. So now stocks are kind of sitting near record highs, and they're deciding where to go next. Ultimately, we think long term it could be higher, but a breather, maybe a little more of a sell-off here could make sense. Thinking about what could move markets one way or the other, stimulus is kind of a wild card right now. The House did pass a $1.9 trillion stimulus deal, but it's on to the Senate, and we have no idea what that package will look like when it comes out of the Senate. Chances are it will include more direct payments to customers, and that's how it looks right now. Consumers. Sorry about that, consumers. But that's how it looks now, but we all know as bills go through the Senate, they can be changed. So we don't know what the details are. And, the details really matter here. But we think either way, stimulus, no matter in what form, it could be a boost to the market. If it is more consumer oriented, though, that could be an even bigger boost. So that's on the horizon. We're definitely watching that closely. And we're also seeing a blossoming rally in reopening stocks. That's been the theme over the past few months. Yesterday was a good case study on why the reopening stocks really matter. All sectors were up yesterday. It was a great day across the board, but the leaders were financials, energy, industrials, and materials. And those are all reopening stocks. If they keep rallying higher, and we think they will, they should be able to support a market rally, even if tech stocks and the other hot stocks tend to pull back a little. And like I said, if we see another dip soon, we expect it to be bought fairly quickly, especially if the S&P tests a moving average. The last two times the S&P has sold off about 3 to 4%, it's bounced straight off the 50-day. And again, the 50-day is right at 38.16, so that's the level to watch. And I'll let Brian talk a little bit more about that. But before I pass it on, let's look around at other markets. So the 10-year yield is sitting around 1.4%. By the way, yields have risen a little bit. They've come back down in the past few days, but I want to remind everybody that rising yields are a good thing for markets right now. The context matters, of course, but Right now, we think yields rising shows that, the economy is getting better, things are improving. This is the kind of yield action you see in early bull markets, early stock rallies that last for years and years and years. We don't know if that's going to happen now, but this does look like an early bull market. So, rising yields are encouraging to us. They aren't a negative for stocks long term, definitely a positive. Gold is up today too, which is a little interesting to be honest. Inflation expectations seem to have increased over the past few weeks. And in that context, you would expect gold to be up too. But, it's sold off quite a bit. These are weird times. There could be a lot of conflicting pressures in gold, but we're definitely watching that space closely too, because there could be some opportunity. And let's see, the VIX is also down, up today. I've got my directions all mixed up. So the VIX is up today, Brian. And I know you've been watching the VIX closer than me. You know which direction it's going. Plus, you've been watching futures pretty closely. So tell us about what you're seeing, Brian.
Definitely. So I have my little VIX watch list up here, and the VIX. Yeah, I think you were correct when you said it was down up because that's basically where it's at. We're going to call it flat on the day. Right now, the VIX is at 2341, up 6 cents now, up 17 cents on the day. But more importantly to me, we've been highlighting this on a lot of the stock plays of the day. The fact that the futures contracts have stubbornly stayed above 25. We look at the March, April, and May contracts, and they're finally coming in a little bit. They've been hanging around the 28, 29 level. These are now, once again, these are the futures. This is what the vol expectations are for the S&P 500 index options going out to these expirations. So the March contract has to come in a little bit. We're at the beginning of March right now, and the way futures work is ultimately that March contract has to trade where the actual spot or the actual VIX index is at. So ultimately, this contract will start trading fairly close to where the VIX is right now. But I think what's more interesting is to go all the way out to April and May. And we see the May contract now below the 28 level, the April contract below the 27 level. So just a little bit of a hint that maybe some of the fear factor is coming out of the marketplace overall. I mean, it's still not a great sign, and we still need to see a little bit more of a trend to the downside. What I think would be real interesting, and we've highlighted this many times, but I'll do it again, is that 2011 level on the actual VIX index. I'm showing it here on my chart. We've had this trend line drawn since the pandemic, since the big downturn in March. We haven't came back and breached that level on any certainty. Since that date, we've touched it a couple of times, drifted lower. We haven't closed below that though since the over a year ago now at this point in time. So always interesting to look at that level. VIX at 23.5, and I guess we'll leave it there. So let's now look at the stock play of the day. Let's talk about Walmart. What do we see going on in Walmart? I have the chart up here for you, Callie.
Yeah, Brian. So, as you said, today's stock of the day is Walmart, good old Wally World. All right. So, Walmart's stock is an interesting one. It did really well for most of the COVID pandemic. Walmart shares, if you look at them, they rallied about 130% from the depths of March through the end of November of last year, thanks to stimulus and the strength of the average American consumer. But since then, Walmart stock has stumbled a little bit. It's dropped about 14% through yesterday compared to the S&P's 6% rally over the same period. And most of that drop has happened recently. So Walmart, they reported fourth quarter earnings on February 18th. And since then, Walmart has plunged about 11%. I mean, that's a big drop. Or, if you want to call it a rollback special, we'll call it that too. So let's think about that a little bit. Let's dig in a little. There are legit concerns out there about Walmart, and people have been pretty vocal about them. Fourth quarter earnings did miss estimates by the most in 10 years. And on the face, that sounds pretty scary. Add on top of that Walmart did lower its sales and earnings guidance for its next fiscal year. I think it's the 2022 fiscal year. So there has been a lot of disappointing news on the face of Walmart. But if you dig into the why, there's an encouraging story underneath, in our opinion. Walmart's profits are lower now but they're lower because they're spending a lot of money to the tune of like $14 billion over the next year on improving the customer experience, investing in supply chain automation, and raising the minimum wage for its employees. Wall Street views this strategy as a good one. They're generally very positive on Walmart getting ahead of the curve. And, they think it could be a big positive for long term profits. Like I said, Walmart is simply getting ahead of the technological and societal curve here. Retailers might need to think about this, these improvements and higher minimum wage over the next several years. And Walmart's basically taking the hit right now. Think about it too. Another theme is, Walmart is trying to temper expectations for the upcoming fiscal year. But, it makes sense when you think about it. Walmart is coming off of a spectacular year of 7% sales growth. That doesn't seem like a lot, but it is for Walmart. Thanks to the run on things like toilet paper and soap that we saw last March and at the beginning of the pandemic. Obviously, we don't expect to see extreme behavior like that again. So Walmart is predicting sales will drop off a bit, and they actually lowered their predictions just a little bit when they released fourth quarter earnings. To us, we see that as, expected and fine, especially because the upcoming year's sales are still expected to be about 6% higher than the 12 months before the pandemic. So there's still a lot of really good growth from pre-pandemic times over the past few years, even if you slice out 2020. So put it all together, and we think Walmart stock could be primed for a rebound. Walmart's higher spending could put it in a better competitive position, especially now as other retailers look to spend more in the next few years. But Walmart's taking that hit right now. We think it'll be in a better competitive position. Plus, consumer data is looking really strong. And as I mentioned earlier, we're about to get, or we could get, another round of stimulus payments, direct checks to consumers. That's also great news for Walmart stock because, if consumers have more money, they're either going to save it or they're going to spend it, or they might invest it. But chances are they're going to spend a good bit of that. And, to make things better, Wall Street agrees with us. On average, analysts are expecting Walmart stock to reach $159 in the next 12 months. That's about 20% higher than it is right now. So Wall Street definitely sees some upside over the next year. All right, Brian, I've talked long enough. I want to get your thoughts on Walmart options. But before I do, let me remind all of our viewers to drop questions in the chat because Brian and I will be answering your questions live after the show. All right, Brian, tell us how to play Walmart options.
All right. If I look at, first of all, I'm going to start by looking at the chart just a little bit in Walmart, because this option strategy is going to be based off of what we actually see in the chart. So as Kelly mentioned, this was the earnings announcement, and then there's a lot of red bars in Walmart since that earnings announcement. Now, if you look back in time, we look back in July all the way to September, we really saw a range for Walmart that was kind of hanging out here. And going all the way back to April and May, we actually see, once again, this trading range. So this is a very interesting range for Walmart. It would be bad news if we actually broke below this support on the downside. We got a little bit of resistance right here. And obviously here's a big bar that broke through and actually set an all-time high in Walmart when that happened back in September. We came crashing back down, only to come running all the way back up there again. Now, ideally, we would like, if we're looking for a dead cat bounce, if you will, it'd be nice if it was coming off its high, but it's not. This downside has happened because of some of the spending that they've been announcing around that earnings. And so this is an interesting range. So once again, instead of just jumping in, we don't want to go out and catch a falling knife overall. So how could we do this with options where we could position ourselves in Walmart, where we can partake in the upside, but maybe buy more if the underlying stock goes down, or buy some in general if you don't have any in your position right now. So what trade are we going to look at today? And we haven't talked about this one a lot as the FOMO trades, but I'm going to go to the options playbook and I'm going to highlight the long combination. Now, the short version of this would be the long combo. That's what most people would say. They just call it a combo overall. Very rarely do people do short combos because that's a synthetically short stock. So we're doing something that acts a lot like the stock. What we're going to be doing here is selling a put. In this scenario inside the playbook, we're talking about selling the put with the same strike as the call that we're buying. So if I sell a put, that means that as the underlying goes down, you can put the stock to me at that strike. If I buy a call, that means that as the underlying goes up, I can call the stock away from somebody at that strike. So ideally, if you buy the exact same strike in the exact same expiration, you're saying if the stock goes down, I'm going to be forced to buy it. If the stock goes up, I'm going to want to buy it. Now we're going to do a play off of this. It's not going to look exactly like it does inside the options playbook. And I'll show you that, and I'll show you the profit and loss graph inside the Ally Invest option chains. So let's get to the strategy overall. And don't forget to put your questions in the chat box as we go along. Now, as always on Stock Play of the Day, this is not meant to be a recommendation. We always call it a paper trade for a reason, because we're just trying to learn here. And specifically, when I'm doing this trade that we're looking at right now, I'm always trying to apply the strategies from the playbook to situations in the marketplace. I'm not necessarily doing it because we have a such and such forecast on Walmart. I'm doing it because we look at a chart in general, and based off of that chart, the option strategy that goes along with the charts and the pricing of the option contracts may be interesting, and maybe you can apply it to an underlying that you like. So let's look at this. We're going to look at, we have many different expirations to choose from. Walmart's very liquid options overall, highlighting the expirations on the right-hand side of your screen right now. We see Walmart is basically flat today. Market's down, Walmart's flat. That's a good thing overall. It just needs to take a little bit, looks like it's taking a little bit of a breather before it's deciding am I going to go back higher, try to retrace some of those losses we've had since earnings, or do I want to break down and go lower overall? So it's really in that period of limbo right now in Walmart. Okay, so on the right-hand side of my chains, we're going to see the put side. On the left-hand side of the chains, we see the call side. We went to the March 26 expiration. We're going out 24 days in time. That's what we're looking to play out. Overall, the strategy really is based off of the fact that you might want to buy 100 shares of Walmart. So we're going to sell a put, and we're going to call that a cash secured put, meaning that if the stock came down to my strike on the put that I'm going to sell, which we're going to sell the 128 strike put, I'm telling people that I am willing to take on the obligation to buy 100 shares of stock at that price. So I'm going to have $12,800 in my account to be truly cash secured. Now, another way to look at that is, well, maybe I could set a limit order in my account saying if the stock came down to there, I'd be willing to buy. This is the alternative to that limit order. And I actually bring in cash for saying that I am willing to buy that stock at that lower price. It's a little bit over 2% below where the underlying market is at right now. It's right around where that support is on our chart on that area, saying that, well, if it comes down, I'll be happy to buy, but we're kind of hoping that we get a little bit of support and we get a little bit of a bounce back in the marketplace overall. So I'm selling that. I'm going to bring in the bid on that is 168 by 178. And quite simply, I'm going to go spend that money. So I'm going to go out and I'm going to look at a call option on the upside, and I'm going to buy the 134 strike, approximately the same amount out of the money. And we'll notice now that's 150 by 180, but approximately what the put is that we sold. The market's a little tighter on the put than on the call right now. And we're going to buy that. So I just checked this little box over here saying I'm going to buy, check this little box over here saying that I'm going to sell this put to use the proceeds to buy that call. And what this does for me is this says, well, if the market comes down, I am willing to buy 100 shares of stock. But what if I'm wrong and the market actually goes up? Well, I don't want to miss out on that opportunity. So instead of taking that cash and using it to buy the stock, I'm actually going to buy an out of the money option contract and give myself some upside out until that March 26th expiration, about 24 days away. So if I look at this, I kind of like this number right here, the net credit at the midpoint of 6 cents in my account. If I have that net credit, that means I might cover some commissions. There will be commissions on that trade. But overall, I'm putting this trade on. I got basically a limit order below the market to buy 100 shares of stock and a limit order above the market saying that if it does break out to the upside, I'm going to be long this call option and participate from 134 on up via my call option on Walmart. So let's make this the official paper trade, and then I'm going to go and look at the profit and loss graph and highlight how it's different than the options playbook. So I'm going to click trade here. So this makes it the official paper trade for this week. And we'll try to work it somewhere at the midpoint. Walmart options are fairly liquid. I would hope that I could get somewhere close to the midpoint. We'll call it a net credit of 5 cents. We'll round it off. 6 cents is where the midpoint is at. And we'll go 5 cents on our net credit here. So we are buying to open one of the March 26, 134 call options, selling to open one of the March 26, 128 put options. We're doing this on a cash secured basis, which means that we want to buy the stock if it does come down to 128. That means we're going to have $12,800 to be able to buy 100 shares of Walmart at 128. This is a strategy that is doable in a retirement account, i.e. a Roth or an IRA account, as long as you are approved for cash secured put selling. And if you're approved for that, you should also be approved for the ability to actually buy a call option. So if you have the right approvals, this is something that you can do in a retirement account, specifically at Ally Invest. Not quite sure at your brokerage firm or if you're listening out there, but Ally Invest allows that type of trading. All right, looking for a net credit to the account of 5 cents overall. And if I scroll down, I am going to look at the profit and loss graph. Okay, so as mentioned, long combination. If we're using the same strike for the put and the call, it looks a lot like owning stock outright. If we split it up at expiration, you see, okay, from 128 to 134, our strike prices, we're really not playing it. We're basically getting this done for a net credit of 6 cents. That means that if it's somewhere in the middle, both options expire worthless. We bring in 6 cents, bring out commissions. We're basically flat on that trade. From 134 on up, we're long the call option. So we have substantial upside potential. You could say unlimited. In this world, it's hard to get anything unlimited overall. But ideally, it's just like owning stock from 134 on up at that expiration. On the way down, we're willing to buy the stock at 128. So from 128 on down, I have all the risk of stock ownership, but basically via the put option, if it happened that the stock went down precipitously to the downside, I'm going to participate in the downside loss via that put. But the goal here is that if it does come down a little bit, we're willing to buy a little bit more and maybe look at a more of a longer term hold on Walmart, just in general. All right, so I can build this as another FOMO trade that we've been talking about. One way to play an interesting stock that's gotten beaten up after the pandemic. It was after the rally back from the March lows that were caused by the pandemic. That's a better way to say it overall. But if I look at this, a lot of those stocks that had done well, a lot of the stocks recently, specifically a lot of the tech stocks, the FANG stocks, the NASDAQ stocks, have came off just recently. And maybe there's some buying opportunity out there. Here's one of the ways that we can play it. We also looked at a couple of trades recently that we also build as FOMO trades, just buying in the money options as opposed to buying the stock outright. So this is another tool to add to your toolbox overall. All right. Okay, Cal, I see a couple of questions coming in. I guess I'll pass the reins back to you. Where would you like to start?
All right, taking the reins. Okay, let's see. So we have a few questions. I'll start off with Wayne. So Wayne is one of our MVP listeners. Hi, Wayne. We're excited to see you back. Wayne asks, hey, Brian, if the at the money puts are priced higher than the calls, does that mean market makers see a higher probability in a bearish move? And does that create a higher risk for them on the downside?
Well, look at Wayne asking the sophisticated questions here. Okay, if I scroll up and if you're implying that the at the money, first of all, we have to have an at the money stock price. We're 131.39, so not quite at the money, but the 131s are a little bit in the money on the put as opposed to the call. So I'm going to call it basically equal here, Wayne, mainly because of the fact that uh, that the stock is not right at a strike price overall. Now, Walmart does have a dividend, and a dividend plays more weight than the way the question was worded. In the options pricing world, as far as puts and calls are concerned, a lot of people will look at the put prices versus the call prices and try to say, oh, that put is inflated. That's a bearish look to the marketplace, or that call is inflated. That's a bullish look to the marketplace. Has nothing to do with it whatsoever. Both put and call prices are tied into one another. And usually, if you see something that looks a little odd, maybe on the put pricing relative to the call on the same strike line, that usually means that there's a big dividend that's on the underlying stock. Dividends get priced into the option contracts. They will inflate put prices relative to call prices. It also happens when stocks become hard to borrow because a lot of people have shorted stock. So, for example, GameStop was a great example of that, where the stock became overly shorted, more than the public float, and that will also affect put prices relative to call prices. Now, the biggest thing about this is to realize that there are many different relationships in the marketplace, and when the Lord gives you lemons, you can make lemonade. Basically, you can come up with any type of strategy using puts and calls. You can turn a put position into a long call position synthetically fairly easily. So because of that, that always keeps call and put prices in line. If they become out of line because of a perceived bearish sentiment or bullish sentiment, that market's going to come right back in line because of these synthetic relationships. So it never is a bearish or bullish sign based off of the prices that you see on the put or call options inside the underlying stock's option chain. So that was a long story overall, but a great question. Thank you, Wayne.
Yeah, a great question for sure. I learned a lot by what you just explained, Brian. All right, so we have a question from Scotty B. Hi, Scotty B. So Scotty B asks, using a 24-day option doesn't seem like a lot of time to execute this trade since Walmart was stuck in the trading range you showed. I'm not sure what the catalyst upwards would be, what could cause a bounce. And then we have a follow-up question from Scotty B that says, would you set up a stop on the put at the same time you execute the trade? So tell us a little bit about short-term catalyst, Brian, and I can definitely jump in and offer my thoughts too.
All right. So overall, the 24-day situation, I'm okay with it however far out you want to go or as short as you want to go. In this trade, I'm all right with it, mainly because we are giving ourselves some upside and we're saying we'll buy the stock if it goes down. Would I put a stop in? No, because I'm looking to buy the stock. So the fact that the stock would come down in this instance to the 128 level overall just means to me that I'm willing to buy it at 128. So if it goes to 127, 126, that's okay with me if you put the stock to me at least at 128. It's better than buying it at 131 where it's at right now, right? That's kind of the concept. So I'm going to see where it's trading. It's trading within a range. I think 24 days was obviously the expiration that I picked to see, well, are we going to go down and test that support level, or are we going to break out to the upside and break through the resistance on the upside? 24 days is a decent period, but I'm not that particular on the period here because my goals are much different overall than for, say, speculating on a long put spread or a long call spread, where picking that expiration is much more important to me just because of the way options are priced and how those type of strategies max out as expiration approaches overall. All right. So yeah, no stop on the downside because I want to buy the stock. And then I'll go back to you. Do you have some thoughts on that one, Callie?
Yeah, sure. So quick thoughts here. So there are a few things at play here. Walmart has sold off about 11% in the past 3 weeks. That's a huge drop. There could be some, short-term selling exhaustion there. Who knows? That's more of a technical thing. The biggest near-term catalyst we could see here for Walmart is a bounce bounce based on stimulus moves. If we hear that there are another round of checks to consumers coming out, we could see Walmart bounce there because Walmart is a big beneficiary of a healthy consumer and higher spending. Our case for Walmart too is a little more long term. As the pandemic ends and as consumers, have all this money that's burning a hole in their wallet. Not all consumers, but the average American has a higher savings rate than ever, and they're holding on to more money than ever. So, if we see consumers spend that money, Walmart again could be a big beneficiary, especially because they offer big ticket items, and we've seen not as much spending on those. So, as the pandemic ends, we could see more spending across the spectrum, especially in the big ticket items. And, that benefits Walmart along with other retailers. All right. I hate to cut it short, but we're at 12:30, so I might go ahead and wrap up questions now. So thank you for all the awesome questions. Thank you for listening to us today. I'll remind everybody that Stock Play of the Day Overtime, where Brian shares his thoughts on the trade and we check in to see how we did. We have that every Friday at 12 p.m. Eastern. So check us out on Ally's YouTube page, 12 p.m. Eastern, and Brian will walk you through the trade and how it's playing out. All right, Brian, take it away.
All right, everyone. So make sure that you click subscribe and ring the bell, then you'll get all the alerts. And we'll see you this Friday for the Stock Play of the Day Overtime. And then we'll see you this coming up Tuesday for the Stock Play of the Day. Thanks for coming, everyone.